Greetings, this is Dwayne from CFRN. So, you want to trade futures, do you? Are you crazy? Well, maybe you are, maybe you aren't. This is the disclaimer page of our website. And in using our website, it says that you've read it. The fact you use the site. Oh, where does it say that? It's kind of interesting. Past performance is not indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore investors should understand that the risk involved in taking leveraged positions must assume responsibility for the risk associated with such investments and for their results. Hence the "are you crazy" part. Oh, it's right here. Required reading for all visitors to this site. Okay. Talks about testimonials, advertising, general disclaimer, it's risky, you lose all your money. It's not an offer to buy or sell anything. It's all here, it's been here all along, but from time to time, be it on the radio show or in the trading room, or I just feel it's a good idea to point it out. Okay. You should always consult with a licensed financial advisor. Blah blah. Right? I'm not joking around. This is, we put this here for a reason. Not just because the government says that we should. It's important that you understand there's substantial risk in trading. That losses can be significant. That we make no claim whatsoever regarding past or future performance. All examples, discussions, lessons, or recommendations are for educational or entertainment purposes only. Well, that's a cheerful way to start it out, right? Well, you know what? I always try to give you the little bit of time I spend with you each day making this video. I just try to deal with you straight. No smoke, no mirrors, both hands on the table. And if you don't agree, then you haven't watched enough of the videos. Okay? Because that's what I do. On the home page, you can sign up for our free trial, cfrn.net. Just boom, starts free trial. Now, here's the deal. If you click this free trial button, it's going to take you to this page. Okay? And then it's going to give you my personal story of kind of, what I went through on my journey. You actually have to, you got to really want to take the free trial. And then you get to here, where you put in your name, your email address, and you click register. All right? Read this. It's all really important because it tells you what you're going to get during the free trial. It also tells you that you're going to get an email that you have to click a link in, because we use the double opt-in confirmation, because we don't believe in spam. We hate it just as much as you do. So if you say you want a free trial and we send you an email that goes, "Are you sure?" and then you got to click, "Yes, I'm really sure." We then send you another email. Here's the problem. Because these emails go out in an automated fashion, they can potentially end up in your bulk email folder, your spam email folder, or whatever other kind of folder your email client or email provider may offer you. So once you sign up, if after 5 minutes you don't have the confirmation email and you've looked in all the places I just mentioned, then what you need to do is you need to call this phone number here, or you need to send an email and go, "Hey guys, I did not get the email. But go look, because it's automated. So if you put in your email address correctly, 99.9% sure you got it. You just got to find out what folder it ended up in. 90% of the time it just ends up in your inbox. And then all you got to do is click it. Then you're going to get another email that has all the instructions, got the link, got the password. It's got the link for you to go download your demo platform, get your indicators installed. There's videos you can watch that will walk you through the process. There's a ton of phone numbers you can call, email addresses if you have any problems, because we want you to get your platform installed and ready for the next day of the live trading room. Okay, you're going to have the data for every one of the E-minis, the Dow, S&P, Russell, even the Euro futures, all the Forex currency pairs, livestock, lumber, grains, metals, and it's not delayed data. This is live real-time stuff. Now, if you don't want to have to go through all the click, click, click and read my personal story, just go straight to cfrn.net/apply. Okay? And then once you're all signed up, good to go, you can come over here and listen to the radio if you'd like. The best thing to do is to go down here and download the toolbar. I walked through the toolbar last night. I won't go through it again tonight, but it's right up here. I just got an email from someone. They said, I'm having trouble listening to the radio. Okay, if you got this little button here, you just go boom and it plays. If you're running Windows 7, you might have to do something with your Windows Media Player, potentially. It seems like when the last two laptops I bought were running Windows 7, and I had to tweak some little setting somewhere. But even without the toolbar, you can just click here, listen to the live radio stream, and you get a little window popping up right here. This is Windows Media Player, and we stream live 24/7. Okay, we are live on the air 2 hours a day talking about the markets. We have the live trading room in the mornings. We don't broadcast that across the radio stream. But from 12 noon to 2 p.m. Eastern, we are talking about the markets, recapping what happened in the live trading room, talking with our other guests. But the station itself, we stream 24/7. Great Christian music, teaching, preaching, discussion, good stuff. So I listen to it myself. I programmed it myself, and I'm constantly adding new content. So I think it was Steve that had sent me, was it Steve? I think Steve had emailed me that, Steve, you're having a problem with the radio. Give me a call in the morning and I'll walk you through it and help you figure it out, whatever the problem is. Okay? Alright guys, cfrn.net. But let's get on to the recap, and it's really going to go smooth and quick tonight, even though I've already burned up 8 minutes and 36 seconds of your time, because I, again, have pre-marked it. But I even went one better. I actually put the prices on there. Now let me show you how I did it. See, if I come right here, here's the entry. If I put the line in, 1377, $25, see right there. I carefully lined each one up. Like if I come over here to this one and put the line on, get on there. See, 1386.75. Okay, so I've already done all that. Today we're recapping April the 25th. Once again, this is basic price action. Yes, the two indicators up on the screen, the CFMA1 and the BBC, those are like fancy reading glasses that take raw price action, and once you put on the special glasses, you go, wow, I can actually see what's happening. Voila. Now, I don't use the weekly trading zones, the slingshot, the cycle, any of our other indicators here, support and resistance dots, because I want to give you the clearest, purest picture I can. Okay, you come to the live trading room, take the free trial. That's when you'll get to play with all the other stuff. You'll get to download all the indicators, ask all the questions, learn how to use all the other tools and filters, everything. Okay? All right, here we go. This is the 25th. It's bullish because we got the MA1 above the BBC. The pullback entry is to 1377.25. Price then goes up to 1386.75 right here. That's a 9.5 point move. I'll say it once. That's the maximum potential. There's no way to get more than 9.5 points out of this move, and fat chance that you got 9.5 points because you either got out somewhere along the way. Maybe you are only looking for 2 points a day, or 3. Or as soon as it closed back below the MA1, you said, yep, that's enough for me. Or this little doji did it for you. Or you let it run all the way up, 9.5 points. And then it pulled back. And then it started even closing below the BBC. And you said, whoa, I definitely got to get out of here. So you didn't take 9.5 points. Maybe you took 4 or 5. Right? Okay. 9.5 is maximum potential. You get a pullback to 84.25. Our system tells you your entry is 1384.25 to the tick. There's no ambiguity. It's not nebulous. Our system says buy 1384.25. If you buy 1384.25, price ran up to 1386. Maximum potential 1.75. Okay. Now, this, I'm not even going to try to explain to you why this really isn't a valid long trade here. It's easier for me to just go, I know what you're thinking, so let's call it a long trade, and let's put a little X here and say we got stopped out for 2 points. Now, how do I know it would be a 2-point stop? Because that's what we use, a 2-point stop. Anytime you see this X on one of these videos, that is minus 2 points. We never risk more than 2 points. Can you use aggressive risk management and sometimes get out with 1 or 1.5 point stop? The answer is absolutely. But we use, we go into each one of these trades with a bracket. The stop is 2 points, so you're never risking more than 2 points on the trade. Okay, so this one here, I could give you a long explanation about why it's not a valid long trade. I'd rather just tell you it got stopped out. Then we can move on. Okay, we get a bearish cross. Now we're ready to go short. Price pulls back to 1384.25. Price then drops to 1380.50. It's a 3 3/4 point drop from 84.25 to 80.50, 3 3/4 points. Price then pulls back to 1382.25 and drops to 1380.25. 2 points maximum potential. We then get a bullish cross. We get a pullback to 1383.50. That's our entry to the tick. I put this here because, as you can see, there's a pretty nice little drawdown going on. Okay, I measured it. Let me show you. The entry, 1383.50. The drawdown, 1381. I miscalculated that, didn't I? Did I? Did I get that totally wrong? I think I did. Well, we'll fix it. 8350 minus 81. Oh, that's a 2.5 point drawdown. So what we're gonna have to do here, I'm sure glad I caught that. Okay. Okay, the entry was here at 8350. We drew down all the way to 81. Okay. Now, there we go. All right. So we had a bullish cross, pull back, got stopped out. We get another bullish cross, and you know what? This one here wasn't a valid entry, but I already marked this one as a 2-point drawdown. This one got stopped out. So where was the drawdown? Let me see the entry on this one. See, the entry on this one was up here at 84. Yeah. And the drawdown was 82. Yeah, see, this one got stopped out to the tick, 2 points. Okay, right here, 2 points to the tick. Okay. All right. Moving on. Bullish cross, pullback. Get these lines out of the way. Okay. 1385 is the pullback entry. And so far, as you can see, it's 7:51 p.m. Pacific time as I'm doing this recap. So far, the high has been, I believe, 1389. See if I can at least get that right. 1385, 1389, 4 points, maximum potential. All right, and that's every trade there was today, based on this setup. All right, let's see how many times we got stopped out. 1, 2, 3. Let's go back across. 1, 2, 3. Okay. So we got stopped out 3 times. Now this afternoon we were telling folks, just don't even be trading, because it was FOMC. But I'm recapping this as if it was just an ordinary day. Okay, plus, now we always add a tick for slippage on each stop. So if we had 3 stops, that's going to be 0.75. So the grand total is going to be a negative 6.75. If after watching this you figure out I got it wrong, send me an email. I'll redo it. I'll fix it. Once again, okay, here's April the 25th. You can tell by the vertical line here. April 25th. Here's our first entry, our first run up. And we got stopped out. 1, 2, 3 times. Okay, I just want to make sure I got this right. All right. Okay, now let's add up what the maximum potential was. Okay, we'll work our way backwards here. There's 4. That was a stop out. That was a stop out. So we've already counted those. 2. 3.75. 1.75, 9.5. Okay, that's a total of 21. Okay. And let me show you how to do this. 21 points. Maximum potential. We know that maximum potential is not realistic potential. You didn't take every one of these trades, and if you took every one, you didn't milk it for every tick available. That's not realistic. Okay? So even though the market really did travel that far, and we knew each entry to the tick, it's not real. Now, the fact that you didn't take every trade or get every tick, chances are you didn't get stopped out all 3 times if you're not taking every trade, right? But you're probably going, no, I'm the guy that I definitely got stopped out all 3 times. Okay, fair enough. So that's why we always count every stop. Okay. But I also do this. I take the 21 points of maximum potential and I throw 50% out the window. 21 divided by 2 equals 10.5. 10.5 realistic potential minus 6.75, call it stops, okay, 10.5 minus 6.75 equals 3.75. Really? We worked all day for 3.75 points. Well, number one, we said it's Fed day. Better off not trading. Now, there's no way you can't look at what transpired here and not agree with the fact that realistically you could have got 3.75 points net. Realistically. Okay? There was 21 points maximum potential. Stopped out 3 times. 1 time to the tick. 2 points to the tick. The other one went 2.5. The other one just went the wrong way. Okay? Now, if you had just taken this trade, not over here, this one trade was worth 9.5 points, stem to stern. So if you had just taken something out of that trade, you would have beaten the realistic net for the entire day. Now remember, we threw 50% of our positive results out the window, like we do every day when we compute these numbers. So you could have, if you had just taken something out of this trade, something decent, you could have beat the whole day's performance based on the way I run the stats here. And I want you to think about that. Because a lot of guys, I hear, man, I'm working hard, I'm going bell to bell. If you come take the free trial, if you hang out with us in the live trading room, if you come to the workshops, you're going to hear us tell you that we don't think bell to bell is really the best way to go. Okay? The less exposure you have to the market, better off you are. And there are times of the day when the market moves more favorably, has more volume, has more activity, more participation. The trades transpire quicker. And if you can get in and get out and meet your daily goal, whatever your daily goal is, okay? Can a person make a really good living with 1 point a day? Sure. If, and it's a big if you have the ability to trade some large number of contracts that makes 1 point worthwhile. What's 1 point? 1 point's $50 per contract. So whether you multiply that $50 per point, whether you multiply it times 1, times 10, or times 100, see, that's between you and how much money you have in your account and what your risk tolerance is. And the fact that you understand everything I said at the beginning of the video, like trading's risky and you can lose all your money. Okay? That's just a fact. That's the truth of the matter. You have to embrace that. Okay? So do you want to trade bell to bell? We say it over and over. We do not think it's a good idea. There are days that you may need to, because your first couple trades you got stopped out, you want to bring the day to break even, or you want to show a profit. But you know what? There's some days that it's okay to get stopped out. Because let's just say for instance that your business plan, your trading plan that you've designed says that you're going to net, that your goal is to net 10 points a week. Okay? Does that mean you have to get 2 a day? No, you could get 3 one day and 4 one day and 3 another day. That would be 10, and there's 2 days left over. So maybe one day you got stopped out for 4, and then another day you made 4, and so those two washed each other out. And so you got your average, you got your 10 points for the week. You averaged 2 points a day, but you didn't necessarily get it 2 per day. Okay? I know it's a lot to try to put out in a video every night and explain everything that's going on and all of that stuff, but I just want you to know the truth about trading. Come take the free trial. We'll share with you what we know. We can't guarantee you success. No one can. And beware of those who tell you that they can or promise that they can. Because they can't. No one can predict the future. Not me, not Gene Dixon, no one. Okay? Is there a way to trade that gives you a high probability of success? Yes. Does that take a lot of time, a lot of work, a lot of energy to kind of nail that process? And is it a somewhat ever-changing process? Is it a bit of a moving target? Yes, yes, and yes. The key is that you want to have the odds in your favor. And you only need the odds to be slightly in your favor over a large enough sample size, and guess what? You come out ahead. If you've never read the book Trading in the Zone by Mark Douglas, you absolutely must read the book if you want to be a trader. It doesn't have any indicators in it. It doesn't have any trade setups. There's no methodology. And so right there, you probably just tuned me out and go, well, then I don't want to read it. I just want to learn the next cool thing that's going to help me make a bunch of money. You really do need to read the book. Okay? Trading in the Zone by Mark Douglas. I've read it. I've reread it. I not only have the physical book, I've got the audio book on my iPad, on my iPhone. Periodically, I listen to parts of it again and again because it helps me have the proper mindset when I approach the trading platform. Okay? It's not about being right or wrong. That is all so very elementary, and you've got to get beyond that if you're going to ultimately succeed at this business of trading. If it were easy, everybody would do it. It's not. But we invite you to join us. We are a community of believers who trade for a living. We'd love to have you as a part of the family, but it all starts with the free trial. Okay? CFRN.net/apply. I hope to see you in the live trading room.